My God, I'm on Snapchat right now, and I'm gonna take a selfie, and I'm gonna have doggy ears. Oh my gee, I'm gonna text my boo, and then we're gonna hook up. Yeah, yeah. And then I'm gonna go to Chipotle. Yeah. And then my daddy's gonna send me my allowance. And then I'm gonna go to school tomorrow. Yeah. Snapchat. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And apparently Snapchat stock has collapsed. So what we're going to do is we're going to go look at the financial statements. And I'm just going to give you a breakdown. I don't care about the whole report. Blah, 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 blah. If you want to go hear pumping, you can go somewhere else. But let's go ahead and look at the financial statements of Snapchat, okay? So first, let's look at it historically. So this is stockanalysis.com. I like it. It's free, convenient, but don't always trust it because it could be wrong sometimes. Number one, we can see massive top-line revenue growth. Snapchat's revenue has gone from $58 million in 2015 all the way to $4.1 billion in 2021, and their trailing 12-month revenue is $4.5 billion. So even during this whole, it's not a pandemic anymore. Like, the whole recovery from the pandemic where the market is going back to reason, they've still had revenue growth. Let's look at their most recent profit margins. So they have a gross margin of roughly 60, at least in the last couple quarters. Okay. I've said this multiple times. For a company that, it looks like they generate a lot of their revenue from ads. I can't imagine how else Snapchat makes money. They have a lower gross margin than some of their, ad competitors like Meta or Pinterest, like other companies that make money through ads. They seem to have lower margins. And we can see one of the bigger problems with Snapchat is they've been unprofitable ever since their inception. Look at their operating margin. That's before interest and taxes. -24, -10, -39, -19, -16, -2, -25, -36. And most recently, we'll get to that in a second, it's probably massively negative, okay? And of course, that means their profit margin's negative. Now, they do have some free cash flow, and I'm wondering if there's some kind of stock-based compensation. Now, I'm such a genius that I've noticed that all these techie companies, they seem to have better cash flow than GAAP profit margin. And the question is why? Well, it's usually, I've noticed, they have a lot of stock-based compensation where you award stock options to your employees, and on the GAAP basis, you have to expense them. You have to expense that using this complex formula, which I don't know how to do, over the vesting period. Okay, so that expense hits your income statement, so it's reducing your net income, but it's not reducing your cash flow because it's a non-cash expense. And actually, sometimes stock options can generate positive cash flow because the employee has to pay you, the company. They have to exercise the option. Cash comes in, and then you give them the stock. But there's a lot that goes into it. But that's basically a summary of stunk-based compensation, okay? We'll go look at the balance sheet as of the most recent one. The last quarter doesn't matter, to be honest. Oh my God, look what a freaking genius I am. Share-based compensation. So their net loss in the last quarter was $422 million. But if you take out share-based compensation, they're almost profitable. $318 million of that loss comes from adding back from deducting share-based compensation. That's pretty freaking ridiculous, okay? So number one, it's unprofitable. And number two, you're getting diluted. But they have positive operating cash flow, see? They're cash positive because they don't pay their employees that much in actual cash. Okay, so we see some capital expenditure. So in some years, they've had some free cash flow. That's great. And they've done some acquisitions. There was kind of a bigger one in the quarter ended December 2021. Change in investment, that doesn't really mean anything necessarily. Let's see. Share issuance repurchase. So they have positive cash flow coming in from share issuance. That's probably from stock-based compensation. And, what's this? Debt issued, $1.5 billion. Seems like they're issuing debt. Interesting. And we'll see that in the most recent balance sheet. That's what, when it comes to a balance sheet, like you can look at the past balance sheets. I mean, I guess it's important, but the most recent one will tell you the most up-to-date stuff because it's a snapshot in time. A balance sheet is a snapshot in a point in time. It does not cover a period. So let's go look at ratios, bro. Look at the absolute destruction of this company's market cap. It went from 116 million. Wait, hold on. Wait, what? Hold on a minute. This company was valued at hundreds of billions of dollars? I thought I was reading the numbers wrong. What? Quarterly. This company got up to 116 billion market cap? Snapchat, really? Price to sales of 31? Oh my God. Oh, we weren't in a clown market. All right, let's go look at the financials. So we can do a brief overview. Let's see. Daily active users increased 19%. That's great. Revenue by revenue, even during a time when ads are getting hammered, up 6% year over year. And they had operating cash flow because of stock-based compensation. Wow. So let's go ahead and just jump straight to the financial statements. So, what's the statement of cash flow? Why is this all out of order? Usually it's like income statement, balance sheet, statement of cash flows. Okay, we'll start with the income statement. So they had like I said, a 6% growth in revenue by revenue. And they had what was their gross profit? Let's see what their gross profit was. Cost of revenue. The gross profit was 58%. So we go back and look. I think that's roughly in line with where they're at before. Yeah, so it's kind of trending down a little bit, but it's not like nuclear destruction. Okay, but the main problem is their operating loss. So for the 3 months ended September 30th, 2020, their operating loss was negative 38%. So we go back and look. What's their operating loss? It's getting worse. -1, -2, -26, -36, and now almost -39%. So they're getting worse and worse losses every single freaking quarter. That's interesting. Okay. Get out of here. They had some interest income, a little bit of interest expense that's going up, and other income. And they had negative 0.22 earnings per share. Now, for stock dilution, so for year over year, they've increased shares outstanding by 2%. So it's not crazy, but there is some share dilution going on. Okay. Next, let's look at the balance sheet. Okay. Cash hasn't really changed. Marketable securities gone up. They just parked some cash in marketable securities. And it actually makes sense because they can buy treasuries and collect more interest now. Accounts receivable, roughly the same. Prepaids, whatever. So their total current assets have increased, which can't hate on that, I guess. Property, plant, and equipment has gone up. Leases has gone up. Intangible assets has gone down. I don't know if that's due to impairments or due to amortization or both. Goodwill has gone up. Remember, if goodwill goes up, the only way goodwill goes up is if you acquire another company for more than the fair value of its net assets. So they've acquired some companies and other assets. So their total assets have increased by, let's see the percentage. So assets have gone up. I guess that's good. By 10%. Now let's go look at their debt, because it looks like they are packing on debt. So accounts payable, nothing crazy. Operating leases, nothing crazy. Accrued expenses, whatever. Okay. So total current liabilities are $1.1 billion. I can tell you right now, unless I get more detail on these convertible notes, this company is not going bankrupt, at least within a year. Okay. If you look at their total current liabilities, they have $1.1 billion due within a year. Take notes, Scott. and they have $5.5 billion of current assets. So they have a current ratio of roughly 5, which is pretty freaking solid. And most of their current assets are in cash and marketable securities. So Snapchat ain't going away anytime soon, at least within a year. Okay. Unless there's just some absolutely nuclear destruction quarter that comes up. Next, convertible senior notes. Here's where they could potentially, at some point in the future, have some kind of debt time bomb. This is where, when you analyze Snapchat, you need to look at this and say, when are these notes due? And what are the covenants of these notes? Because they've increased their debt by roughly 50% long-term debt. And when that debt comes due within a year, you take a note, Scott, when it comes due within a year, it then goes to current liabilities. And suddenly their current ratio gets a little bit worse. However, they still have plenty of cash and marketable securities. And because of stock-based compensation, they really aren't burning that much cash. At least we'll see. They could almost pay off all of their long-term debts, all of their debt, with their current assets. Well, technically they could, but then they would have no money. Okay. So overall, not the worst balance sheet. They have a very solid position with current assets, which is going to help them survive. So that's a good thing. What they're doing with this debt, I have no idea. All right. Additional paid-in capital, accumulated deficit, accumulated other comprehensive income. So basically, they have, let's see, treasury stock. Are they buying back shares? When did they buy back shares? Okay. Yes, we're a new company. Let's buy back shares, bro. Let's go look at stock-based compensation. Oh my God, $342 million of stock-based compensation. Now, they still wouldn't have been profitable, but like I said, this is going to help their cash flow. Okay. Now let's go back to cash flow. So overall income statement, I mean, they're growing their revenues, but their losses are absolute trash. Their balance sheet is not the worst in the world. They're probably not going to go out of business within a year. Consult your financial advisor. And we'll look at the statement of cash flows now. So they had a net loss of $359 million. And with this add back of stock-based compensation, suddenly their cash flow looks really freaking good now, doesn't it? Oh, their cash flow. Okay. So, the big add backs were basically stock-based compensation and accrued expenses, which is normal. So they had positive cash flow of $56 million, and they purchased $38 million of PP&E. Strategic investments. Yes. I don't know what that is. They had a little bit of an acquisition, probably looking with that, and they purchased some marketable securities. So basically what they're doing is they're taking their cash and they're parking it in hopefully treasuries. Hopefully they're not putting it in like I don't know, tattooed chef bonds or something. But you should always read about that, because even though they have marketable securities and that shows up on their balance sheet, you want to make sure they're not putting that in trash. Okay. But they're probably putting that in treasuries. So, I mean, overall, they have free cash flow. They have operating cash flow, obviously, if they have free cash flow. But that doesn't impress me because, like I said, they have this stock-based compensation. It's the same thing as freaking Palantir. God, these companies, man. Oh, we'll just dilute you, bro. And they repurchased. Okay, here's the treasury stock. They repurchased non-voting common stock. Why did they do that? That's interesting. That's something you need to research. Okay. So overall, this stock crashed 25%. And the question is why? I don't know if the market was pricing in that they wanted more revenue growth or their loss was worse than expected. I don't know. But whatever happened, the stock has crashed. Let's see how bad it's crashed. Snap. Woo! Holy smokers. Let's see. Damn. So it's currently got a market cap of $13 billion. Am I buying this stock? No. It's basically Palantir, but a little bit worse than Palantir. But That's basically it. I mean, it's not going out of business. The revenue's still growing, at least within a year. The revenue's still growing. The statement of cash flows, they do have positive cash flow, so they're not at imminent risk of burning through all their cash. It's not the worst company in the world, but the question is, how much are you going to pay for it? That's the real question. And the other thing is, what does their future look like? Because you can look at their past, but the future is also part of investing. That's basically all of investing. And that's something that is unknowable. So that's my thoughts on Snapchat. Let's do some comments. You look like Immortan Joe from Mad Max. I don't know who that is, but you better be hot. When you take your shirt off, you look like Immortan. Yeah. I don't know why I'm wearing a shirt. I just felt like it. Any bets Twitter in 2 years is the outdated Gen Z list. Similar happened with MySpace. Twitter's hot garbage. I need to look at Twitter again. The last time I looked at it, I just had a horrible impression. And of course, Elon goes and buys it. Who is F1 Austin? Do you sell strongman cha-cha-chia pet? I do not. LaFufu was telling people in Tornado that Snapchat is the next Facebook. It's the future. I mean, what has LaFufu said that is intelligent? Name one thing that LaFufu has said that's intelligent. Liabilities are only up like they don't have the worst balance sheet. The big issue is, are they going to keep packing on long-term debt? And when does that debt mature? But they still have so much current assets and they're not really burning cash from operations that if they had to pull back on investments or, whatever, buying back stock, I don't know why they did that. I think they're going to be fine in the short term, personally. As an accountant, can you answer a question about the government? We have so much debt. Can we actually yeah, people continue to buy treasuries. I mean, I don't know how bad it is now with yields going up, but we're just fine because we have a ton of debt, but we had low interest rates forever. That's a good, they have a solid current ratio. Debt time bomb. It's not as bad as a Small Direct Club. I'll say that. Not even close, to be honest. Scott writing it down. Yeah, Snapchat stock analysis. The Trade Desk is the best ad tech. Look at that, baby. I haven't looked at it. Nah. You think it's better to ask a girl for a Snapchat instead of a phone number? Well, I don't use Snapchat, so I would never ask a girl. When I was on dating apps, I would be on the app, get a match. I'd message a girl once or twice, get the number. If she didn't want to give it to me, done. Next girl. And if she did, then I text her, set up the date, and that's it. Simple as that. Meta earnings on 26. Is Fabio's cheeks going to get clapped? I have no idea. I don't think he's dumb for buying that. But I thought that Netflix was the vibe. The vibe, bro. Vibe. That Netflix, bro. Yeah. Yeah, Rastafarian, man. He's so stupid. Have you heard of Elevance Health? Their stock has been extremely strong. I have not. If you email me, I'll maybe find time to look at it. I'd rather invest in Pokemon cards than Snapchat. I'll leave that unanswered. LaFufu was right on Tesla stock. Yeah, he was. Because if you buy a bunch of trash stocks and one of them goes up, you're eventually going to be right. If you buy 20 clown stocks, you're eventually going to get one right, but you're just an idiot buying clown stocks and hoping one that goes up or has a short squeeze. And the story of Tesla is not over yet. People think it's a done deal. Tesla is like basically Microsoft now. It's an established, mature, powerful company. I don't buy that narrative. I bet most posts 2021 market analyzing channels on YouTube are due to Tesla. Not long ago, they were Apple. Oh, yeah. I wonder what the next grift stock will be. I can't wait to see. Palantir. Anyway, that's it. Hope you enjoyed the video, and I'm out. Cheers.